Hey, welcome to your advanced ranch management class for this week. Now, our focus this week is two things. It's taking the cash flow budget idea that you have and looking forward to what it would look like, or how could you approach it if you need to do a year 2 and a year 3 set of projections. Also, I'm plugging in financial analysis this week. A lot of this could be a review for you, but I wanted to show you in this video about the week, show you what's there, and then also want to talk about how you could get that homework done. So let's take a look. All right, when you go into your Blackboard, you're going to see week 7 here, and you're going to see the cash flow budget key from the exam 1. So if you did that work, of course, on the exam, I've got to grade those, but there's the key on what got completed and how. Now, we're going to work on this week a cash flow budget homework, and it's going to be that same hay business, except I've revised the cash flow file to help get this going. I also included the Coastal Bend Hay Enterprise budget from the Extension Service. That's where I drew these numbers out of. So looking at kind of what does a normal business projection or estimate or budget look like per acre, and then I just use that to build the budget from there. So I just gave you that just as an FYI. Also this week you've got some videos on financial analysis that lays out the formulas and why we're doing this and how I view financial analysis to be completed. And so that's just some things for you to look at. And then the homework is our focus. So there's what the week looks like. Let's take a look at the Excel file that I've loaded for you. It's called Revised Cash Flow. If you looked at this previously and you saw another one, go back and get this one because this one's got some updates for you to help. One is that our resource page, just like before, but I made some changes and tried to highlight them in yellow. Owner-operator, we had $80,000 in there, and looking at our budget, we decided that that's probably a little bit much from a financial investment for the owner to operate. If we're successful, then we'll talk about raises. But let's back down to $65,000 a year. So I made that change on the resource page, which actually made the change the rest of the way through the sheet. I also added for you the changes that we're looking at for years 1, 2, and 3. Now, year 1 is basically the same that you had before. We're looking at 500 acres. We're looking at 9 rolls of hay harvested per acre. We're looking at a price of $72.22, and that's kind of what you had in our initial. But in year 3, we're looking at slightly different sets of loan payments with a balance. We're looking at, I'll go over that in a second. We're looking at expenses are going to go up, and we're looking at income is going to go up by these amounts. So these kind of give you your formulas to use in the rest of the area. One thing you'll have to do in financial analysis is kind of estimate if there's an opportunity cost of labor and management not paid. So in this case, I'm saying yes, there is. In year 1, we're only looking at $65,000 as a manager, but really that should probably be more like 85 in this case is the example. But we're not paying that. We're paying just shy of that. The next year, of course, the operation's getting bigger. We're doing more marketing. We're doing more sales. We got a website marketing the quality of our hay. And then so that management intensity increases. And so these aren't budgeted, but they are part of what we're not paying. So they're part of what we call return on assets and return on equity. So that's used, so I wanted to give you that amount. All right, so there's your resource page. Just a few changes, otherwise it's the same deal. It's 500 acres, and we're looking at making $6.50 an acre starting out on our hay sales and $30 an acre on grazing lease. All right, next sheet, revenue and expense sheet. What I did here was, blow this up a bit. What I did here was I took our revenue and expense sheet that we had for year 1, and I just left it exactly how it was, pretty much, except I have changed the salaries. So that flowed through and updated my sheet here, so it should have done the same for you if you used your old one, but if not, use this one. That's what that's doing for you. That's updating that. But I went down here and made a year 2. Now, I went ahead and did the work for year 2, but I did not do it for year 3. That's where the homework begins for you. So year 2, here's what I did. I basically went in here and made sure I had everything I needed. And so, for example, our hay sales, they were $650 per acre. It went up to $682 per acre because we took where it started and we put 1 plus the growth rate, which is going to be 5%. And so hay sales was, in this sheet, 650. Now it moves up to 68.8250. You'll do the same thing to get the hay sales here. It's sitting there at 650, which is not right. All right, same thing for the grazing lease. It went up by 1%, which is going to be 30 cents. And then the expenses, they all went up. It was $100 an acre. It was total $252. Now the total's $259. And so those are 3% increases and 4% on miscellaneous. That's going to be our website trying to market our hay better. And so you can see that these are the base values, and then you can see the values changed for here. Now, once those values change, I use the same formulas as I did up here to create this. So, for example, that is just going to be 3% more of whatever that number was, and that's there. This one is going to be 3% more than it was there. So I just use this to mess with the timing, just like we had originally in our base. So your job is going to be to do this right here for year 3 to get that all updated. Land management and labor, these things will change a little bit. Like that one changed right there, and those changed as well. Those are our new off our resource page. All right, so hopefully that makes sense of your resource page. Cash flow, what should you do here? Well, here's what the cash flow was after I changed those salaries. But here's going to be cash flow for year 2. And how does it start? Well, its beginning cash balance is equals, and it's whatever you finished with. And then now it's going to be looking for the rest of those numbers. Here in your 3rd year, same thing. It's going to be equals. And what did you finish with last year? And then it's going to go through and update them from there. So what you'll do is you update your cash flow. Income statement, same thing. Here is year 1. Put year 2 and 3 right beside it. Balance sheet, it normally was done with assets here, liabilities here. I just moved that stuff to the bottom, so now we have it there. So that lets you do a year 2 and a year 3. Financial analysis is the last part. You could look at the videos to find the formulas, but in financial analysis, we are looking at a current ratio and working capital. This will tell us about our liquidity. These will tell us about our solvency, especially looking at interest debt. And then ROA and ROE and operating profit margin are also listed in the videos, so you'll be able to calculate what those are. And then I did some efficiencies. What's the cost per acre start out at, and what does it change to? In fact, cost per acre equals, we could go up here and look at our resource page for year 1. And cost per acre is right there at, let's go to revenue and expense sheet, right here at 252 is what it is. But how do you get that? Well, what you could do is you could just say equals. We had our total cost, because we got to figure out everything, right? Those are our total expenses divided by our year 1 size of the operation, which is 500 acres. And so that means the cost is $550 per acre. Year 2 and year 3 are going to be, again, based on the income statement. Now, when you look at this, you're wondering, why is that cost per acre here 540? Well, when we go across here, we have some expenses that are fixed, or variable, excuse me, but then we have expenses that are overhead, so you got to add all those together. Really, the income statement, that's what it does. There's the total cost plus labor and depreciation and interest, and so that is going to be your cost per acre. Cost per unit sold, annual changes in income, that's going to, what's the difference between 1 year and the previous? Change in total cost, change in revenue. So anyway, hopefully these are simple for you to work out. All right, so hopefully this helps the video. What you're starting with is a revised sheet. Pull the one off Blackboard, use that to start with, and then follow the steps all the way through. The template is kind of there. You just got to fill in the blanks. Let me know if I can help you this week just by emailing or call me or text me, either one. Thanks.